Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Sifiso Buthelezi. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery. Grade 12 learners, welcome to today's lesson. I am Mr. Buthelezi S. The topic for today will be management of tangible assets. Today we are going to be looking at the following objectives. Number one, you need to understand the definition of tangible assets. You need to also be able to identify and discuss the different methods of depreciation, be able to calculate depreciation using different methods. The third one, you should be able to apply the GAAP principles related to tangible assets. You need also to be able to calculate the depreciation of assets when they are fully depreciated. We call that as residual value. Second, lastly, you should be able to deal with management or control of tangible assets. Lastly, we should be able to discuss and be able to respond to ethical questions or ethics related to tangible assets. Now, grade 12s, we are now looking at the word tangible assets or the word fixed assets. What are we talking about? Tangible assets or fixed assets refers to physical assets that the business will be buying. Why are they buying it? They are not buying this to sell them. They are buying them so that they can use them to operate on a daily basis. Meaning, the full definition of tangible asset now says these are physical assets acquired by the business or the company, and they are not intended for resale. But why do we need them? Why do we use them? Use them so that we can operate on a daily basis. Why must we operate on a daily basis? Because we want to generate profit. Remember, grade 12s? Tangible asset is unlike trading stock. With the trading stock, we buy it with an intention of reselling it. But with our tangible assets or fixed assets, we buy them because we want to generate profit. We want to use it for our operations so that we generate profit. And remember, grade 12s, these assets, they supposed to last for more than 12 months. What are the examples of these assets now? What are we talking about? The first one now, we are talking about land and buildings. Buildings could refer to a room, a house, a storeroom. That could be our buildings. Land could refer to a place where buildings are built. Right, we call it as land and buildings. We also have the vehicles. Now, what are vehicles now? Vehicles will refer to the cars. It could be the trucks. It could be the lorries. It could be any private car. And then we talk about the equipments. What are the examples of equipments now? We are referring to the computers, the fridges, tables, chairs, projectors, and many more. Why am I giving you the examples of equipments? Because one day in an exam, they would say, depreciate computers. You need to know, where does computers belong to? They belong to equipments. Now, these are examples I was referring to. Now, let us look at them. Take a second and look at them. Which one is which here? Which one is vehicles here? Yes, correctly. The cars here, these are our vehicles. Which one is our land and buildings here? There is our land and buildings. Grade 12s. Which one is our equipment here? We have our equipment. We have our equipment down here. Right. This is what we are talking about. We have our equipments. Right. And then moving on. Still on tangible assets, which is also known as fixed assets. What are we trying to address here with you grade 12s now is that the value of tangible assets such as the vehicles as well as the equipment, they depreciate. Why do they depreciate? They depreciate, one of the reasons could be because of wear and tear resulting from daily use. Meaning, if I drive my car every day, it will lose value. The value will go down because I am driving it every day. Right, we got that? If I use my laptop every day, if I use my refrigerator every day, what will happen? It will lose its value. But now, grade 12s, very interesting. The value of the land as well as the building will now appreciate. What do I mean by that? The value of my land and buildings will always go up in most cases. Right. So when is it going to go up? Whenever these land and buildings are properly maintained. If they are well maintained, the value goes up. Now, grade 12s, the tangible assets will be recorded at a cost price, irrespective of whether the value declined or the value increased in the market value of shares. Now, what am I saying? I am now quoting GAAP principles or a GAAP principle affected here. What do we call that GAAP principle? We call it historical cost. What does historical cost say? What does it state, grade 12s? Correct. It says the assets are recorded at its original cost prices, even though the value went up or went down. We still record them at their original cost prices. What does prudence say in this regard? It says that whenever assets are losing value, then I need to disclose, I need to record and calculate that loss of value. What am I saying when I say loss of value? I am saying depreciation. Got that? Now, let us look at the concept for tangible assets. What concept that are utmost important, those ones that are very, very important when we discuss tangible assets. Now I've been saying this word over and over again, grade 12s. I've been talking about the word depreciation. But what is this depreciation? What is this beautiful thing called depreciation now? Now, definition of depreciation, it says that a reduction in the value of assets over time due to in particular wear and tear. Meaning, when I say depreciation, I am saying it is the loss of value an asset will experience because of it being used over time. Meaning, every year, vehicles as well as equipment will be losing value as it will be used to generate profit. Now, it is important that we apply prudence principle by declaring and calculating the loss of value in these assets and record it accordingly. Remember, our depreciation again, it will be known as the imputed expense. This is our imputed expense, meaning it should form part of our statement of comprehensive income. Now I will have my depreciation first year, depreciation second year, depreciation third year. You see what I'm doing, grade 12? It's not something nice. It's not something nice experiencing depreciation. It is an expense, 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 expense combined together. Now they now produce what we call as what? Accumulated depreciation. Because now, what is accumulated depreciation now? These are total loss of value in assets from year number 1 plus year number 2 plus year number 3 plus and so on, combined together. We call them as accumulated depreciation. That is what we are saying here. The total amount of depreciation deducted from fixed asset since its acquisition. Meaning, ever since we bought it, and then we will count and add and add and add. The total of the loss of value, we call it as accumulated. But depreciation is just loss of value in that particular financial period. Now we have what we call now as carrying value. What is this now? It has its own name again. It's either I call it as carrying value or I call it as book value. How do I calculate this? Remember, grade 12s? I would say my original cost price of that particular asset minus my total accumulated depreciation. Then I will get my carrying value. Now, what is the definition of carrying value or book value? This is an original cost price less the depreciation that has accumulated over the period in which the asset has been in the business. Now, meaning when I say carrying value, I might be referring at something like called net value of my assets. Meaning it is the price I bought the asset with minus the loss of my asset. Then I get my carrying value. What is the formula for carrying value, grade 12s? Let's see. Let's see if you can get it correct. Got it. It is cost price subtract accumulated depreciation. What am I talking about? Let us now talk about this. This will bring us somewhere. Lifespan of assets. What am I saying when I say lifespan? This is an expected length of time the asset can reasonably be used to generate income and be of great benefit to the business. How long? It means I could say this is mortality of an asset. How long an asset is expected to last. It is the period in which we expect our asset to last and keep on giving us profit, benefiting us as a business. Remember, we bought this asset so that they can give us profit or benefit the business. What is this now, grade 12s? Let's talk about this. What is a fixed asset register? Let's think about grade 11 now. Let's go back and think. Grade 11. What did we learn in grade 11? Asset register. Some of you got it correct. What are we saying now? We are saying here, this is a register where all assets bought must be recorded. We record all asset bought in our fixed asset register. Now, this one is just a list. In simple terms, it's just a list of assets that belong to the entity. Meaning it lists all of them, right? Meaning if we have 100 cars, we will have 100 fixed asset registers. Why do we need a fixed asset register? Can you respond to that, grade 12s? Maybe a second. Why is it so important for our business? Why is it so important for our company? Why must we do a fixed asset register? Maybe these are some of the questions you need to have as you prepare for your June exam. Why do we need a fixed asset register? Remember, grade 12, this is the topic for paper 1. It is also a topic for paper 2. Now, what are we saying? We need this fixed asset register so that we can keep track of the book value of our assets. We need to know how much value has this asset lost. How are they valued right now? How much are they valued right now? We want to know that because your car or the vehicles or your computer, if the value was 2,000, the book value was 2,000 in 2023. In 2024, end of 2024, it won't be the same. We want to know how much is it now, the book value of those assets. This is why we need the fixed asset register. We also want to determine the depreciation to be calculated and recorded for management and also for taxation purposes. Remember, for us to be charged tax, we need to ensure that we give the SARS or the government the correct net profit or the correct profit so that they will be able to say, we are charging this business so much. And also for us to know, to be sure, how much should we pay. Tax cannot be calculated on the wrong figure. The figure given to calculate tax should be correct and verified. So the fixed asset register will help us to calculate the depreciation that will later record in the statement of comprehensive income, which will later give us a way in which we can calculate our tax. Now, what is included in the fixed asset register? Can we brainstorm? Can we brainstorm what is included in the fixed asset register? Let's have the first one. Okay. It should have the date of purchase. It should have the cost price, details of the seller, type and model, serial number, receipt, as well as or the invoice. Receipt or the invoice. Again, it should consist of our rate of depreciation, our book value, how long we expect it to last, the lifespan, which method of depreciation are we using to calculate these assets. It should be stated there. We are going to talk about the methods of depreciation. It should also have the depreciation calculated there. It should also have the accumulated depreciation calculated. Here is an example of our fixed asset register. Let us look at it. Take a second, few seconds to look at this. Right, can you see? It's written on top. Asset register, there's a name of the business there. This is the first register, general ledger account. What kind of an asset we find in this? For an example here, it is given this is a vehicle account. What is the name of an item? This is our Nissan delivery van, 2 liter. The date is written there, 1 March 2024. And then the cost price of it is written there. Where did we buy it? It's written Nissan Monument. And then the percentage of depreciation. This is what is important now. Our asset will lose 20% of its value every year. That is what is going to happen. But how is it going to lose it? How are we going to calculate this depreciation? We are going to be calculating this depreciation using a cost price method. Now, below it will show our details of depreciation. This should be filled in. The dates, annual depreciation calculations accumulated, as well as our book value, also known as our carrying value. Now let's come to this one. We've been talking the word depreciation, we have defined it. And then now let us talk about the two methods used to calculate depreciation. What are those methods? Are you getting it right? Perfect. The first method, it is called the fixed method or the cost price method. Now, it takes place over the useful life of the asset at a fixed rate. Over 5 years, example, it can be 20% per annum. Second one. This one is a method of many names. Sometimes I call it as a reducing balance method. Sometimes we call it as book value method. How is depreciation calculated here now? We write off depreciation on the carrying value amount. What is the difference between the two? The other one, which is the fixed or the cost price. Depreciation is calculated on the original cost price amount. But on the diminishing balance method, depreciation is calculated on the carrying value. Okay, grade 12s, here the word is coming back now, carrying value. What are we saying about carrying value? How do we calculate carrying value now? Remember, carrying value, how do we calculate it? We say cost minus accumulated depreciation. Now, what are we saying about the fixed method? We are saying that the depreciation is the same over the estimated useful life. As long as the number of months are the same, then the depreciation will also be the same. If it's all 12 months and then the depreciation was 1,000 in year number 1, meaning in year number 2, it will be 1,000, year number 3, 1,000, year number 4, 1,000, up until it is fully depreciated. Right? Now, but for diminishing balance method, it differs a little bit. Depreciation will keep on reducing. The reduced balance is used to calculate depreciation. This is why the depreciation will reduce over here. Because when we calculate depreciation, we calculate depreciation on a reduced balance. This is why it's called diminishing, because the balance keeps on diminishing, meaning it goes down. Right, now, how do I calculate my depreciation? How do we calculate? That is the question now. How do we calculate depreciation? It is the cost price times by the percentage times by the period. Now, that is how we get depreciation. That is for the cost. Remember, for the cost, I take the cost as it is, the original. I just multiply by the percentage times by the period. What am I saying about the period? Meaning 12 months out of 12 months. What am I saying about the rate? 10 over 100 for an example. Diminution. What is happening with diminution now? Diminution, I'll have to take my cost, first subtract my accumulated to get what? To get my carrying value. Now, carrying value multiplied by the percentage. Remember, my percentage for an example can say 10 over 100 if my depreciation is 10% on diminution. What is my period now? My period would say 2 months out of 12 months if the asset only lasted for those 2 months. If it's the whole year, then it is 12 months out of 12 months. Or, alternatively, I can use this word. This is so nice because it reminds us on how this is done. The word art. This word, art. What does art mean? It means amount divided by my rate divided by my period or the time. Okay? So it means it's going to be our amount multiplied by 15 over 100 if the depreciation is 15 over 100 times by 7 over 12 if the months the asset has stayed is 7 over 12. Let's move on. That is how we calculate depreciation. Remember the word art. There are 3 categories of our assets. Let us now look at the breakdown of the calculations. For us to correctly and effectively calculate our depreciation, it is important we look at the word son. What does the word son mean? It means that when you calculate your depreciation, you are going to calculate it in 3 intervals or 3 parts. You are going to calculate depreciation for the sold, the asset that I've sold. You are also going to calculate the depreciation that is old. What do I mean by the word old? I mean the asset that was there before an asset was bought or an asset was sold. And then lastly, you will have to look at the word new. What am I saying about the word new? Meaning this is the one I bought. The one that I bought during the year. Then we'll have to calculate depreciation for it. We'll look at when the intervals, when do we calculate our depreciation. Now, let us look at this depreciation of an old asset. For the cost price method, it will now say total cost minus cost of the sold minus cost of the new if it is added. Okay? But for diminution, we would have to say total cost minus total cost of the sold minus cost of the new if added. And then we will now less. Right. And say total accumulated minus total accumulated of the sold. Then we will start working from there. So it's important that we look at the two. So meaning, what am I saying here? What am I saying here? For me to calculate for the old one, I need to take the cost at the beginning minus sold. Okay? Minus new if it's already included. I will get my answer. And then for the accumulated again, I will say accumulated at the beginning minus total accumulated of the sold. Remember, total accumulated of the sold will be the depreciation for the current year for the sold plus the other depreciations for that disposed asset. Now, grade 12, we've been talking a lot. We've been looking at the theory. Now we are coming to our activity number 1. What are we doing in this activity? Let us look at this. What are we required to do here? Number 1, we are required to calculate depreciation. But where I'm calculating depreciation on what? Because I need to calculate depreciation on 2 assets. Now, I am calculating my depreciation on what? Equipment. Very important. Think which depreciation are you calculating? We are calculating on equipment. Number 2, we are going to be calculating accumulated depreciation on what now? On the equipment that we have disposed or sold. Number 3, very importantly, this will take us back to grade 11. I know this is your favorite part. Grade 11, we are going to be calculating the asset disposal account. We are going to prepare the asset disposal account in the general ledger. Lastly, we are going to be entering or showing entries in our note number 3, which is fixed assets. Here's the information given to us. We are given the equipment at a cost 101,000. We are given the accumulated depreciation on equipment, which is 42,700. What we need to note that this is the trial balance on the 1st of March 2023. Additional information now, what is extra that is given to us? We are told that this equipment, there was equipment bought on the 1st of November 2019. I'm underlining what is important, grade 12. Remember, this equipment bought on the 1st of November 2019. We bought it for how much? For 45,000. It was sold at a cash book value, for cash book value on the 30th of November 2023. Okay, this is what we have, meaning this will affect our disposal. Let's move on now. We have our new equipment costing 75,000, which was purchased from BM dealers on the same day, and payment will be made during March 2024. What is the cost price of it? It is 75,000. And this was purchased. You can see now our son is getting there. There is sold, there is new. Now, no entries have been made for the new equipment purchased. So there were no entries for new as well as the sold equipment. So it means, what must we do? We need to make those entries. Very, very important. Crucial now. We need to note the percentage of our depreciation. We need to note the method. I'm circling this so that we understand what's happening here. So that when we calculate, no one is confused. How are we calculating this now? Can you work it out, grade 12s? Right, let me assist now. We are now saying for the sold one now. Remember, it is 45,000. Remember, what is this 45,000? This is the cost price. Now, where is this 20 coming from? Remember, this is the percentage of the depreciation. Now, how do they get 9 months? Remember, it stayed for how many months? For 9 months. That is from the 1st of March up until 30th of November. So it will be March, April, May, June, July, August, September, October, November. Okay? Now that will be the 1st of March to the 31st of November. Okay, right? Remember, this is coming from here. If we can just move back. This was discussed here. How long is this period now? It will be March up until November. Let's move forward now. That is how they determine the 9 months. So remember, grade 12s, for you to always get this thing right, it's important to use your fingers when you calculate. So it's March, April, May, June, July, August, September, October, and November. That will be 9 months. Then our answer now becomes our 6,750. Remember, this answer should form part of your statement of comprehensive income depreciation. Also form part of your note number 3, movements depreciation for the year. It will be one of the amounts that will be added with other depreciation amounts. Now for the old one, remember, how did we calculate the old one? Now, where is the 101,000 coming from? Remember our trial balance. It said equipment at cost is 101,000. Now, now what do we do now? Why are we subtracting the 45,000? Remember, grade 12s, for me to know how much assets are remaining, remember, old can also mean remaining. Remaining from what? After subtracting the sold one. So it means I am going to remove the sold one. Why am I removing the sold one? Because the depreciation for the 45,000 is already calculated. Now it's going to be 101,000 minus 45,000. Now, where is the 20 coming from? Remember, this is what was given long ago in our activity. We were told we had to circle that. We were told that equipment is depreciated at 20% per annum on cost. Right. So there is the percentage. Now remember, we use the word at, which is the amount, the percentage, as well as the period or the time. So there is 12 over 12. Remember, always the old one will always stay for the entire financial period. For the old one, it will always say 12 months out of 12 months. Now our answer, we're getting 11,200. Now last one. Remember, this word is now complete. Remember, we talked about the word son. Remember what they said there? They said on the very same day after disposing an asset, we bought another equipment on the very same day. But when did we buy it? We bought it on the very same day. What is that same day? That was the 31st of November. Now, 31st of November, it means when we calculate depreciation now, we will calculate from the 1st of December till 28 February 2023, if that is our year. Right. Now, so it means that now we are going to count the number of months. We're going to say December, January, February. That is how they got the 3 months. Where did they get the 75,000? It is coming from our transaction. 75,000 of equipment was bought on the same day. Where are they getting the 20%? Remember, 20% remains the same. As long as we are calculating depreciation of equipment, the percentage will always be 20%. The method cannot change for the new car. The method will remain the same. So we need to be consistent with our methods. Now, what is our amount now? It gives us an amount of 3,750. Now we need to have our total depreciation. Now, how am I getting my total? This is the step that some of you would be missing. Please do not miss the step. After calculating the 3, don't forget, you need to take the sold plus the old depreciation plus the new depreciation. Then you will get your total depreciation. Okay? Now, let us look at our accumulated depreciation on equipment sold. How can we calculate this? Let us now think back. Why now this busy calculation and all of that? How does this work? We go back to our question. Our question, we were told that the equipment that we had, it was bought long ago in November 2019, meaning the 1st of November 2019. This is November 1, 2019. Now, for us to get our accumulated depreciation, remember, I have explained earlier on, what are we saying? What is accumulated depreciation? We said it is the total of depreciation from year number 1 plus year number 2 plus year number 3 plus year number 4. There was a reason why we were explaining that. We were explaining that so that you learners would understand that accumulated, you need to add depreciation plus depreciation plus depreciation plus depreciation and so on and so on. Okay? Now, let's come back to the question. The equipment was bought on the 1st of November 2019, meaning it will lose value on the very same month. Meaning, let us calculate together now. We're using our hands. We will now have November, December, January, as well as February. How many months now? This gives us 4 months. Got that? First of all, grade 12s, you need to be very good with your grade 1. Grade 1 work, what is grade 1 work that you've learned? The months of the year. And 1 plus 1 plus 1. When did we learn that? In grade 1. So you'd agree with me, we started accounting long ago in grade 1. Okay? Now, so it's November to February, that is 4 months. Now, how do we calculate? We go back now and think. Remember, the time we were showing you the methods of depreciation. What did we say about the cost price? Correct. We said for us to calculate the cost price, we need to take the original price of an asset, multiply by the percentage, multiply by the period or the time. We said for us to calculate the depreciation, we are going to use the word at. What does the word at mean? Amount times the rate times the time. So that is 45,000 times by the percentage of 20, which is 20 over 100, multiplied by the number of months. Remember, this number of months are now coming here. Obviously, we're not going to say times 4. It must say 4 out of the total number of months of 12. Now, we get an answer to be 3,000. Now, I come to year number 2. This is year 1. Then I come to year number 2. Okay, year number 2 now, it will start normally. That is the beginning of March, 1st of March. Meaning it's March up until February. So it's March, April, May, June, July, August, September, October, November, December, January, and February. That will give us how many months? Grade 12s? This will give us 12 months. So it is now going to be 45,000 multiplied by 20 over. Remember, we still maintain the 45,000. Why are we maintaining the 45,000? Because of our method of calculating depreciation. We are using a cost price method. This is why we keep on maintaining it. We still maintain our word, our special word, which is at. Amount, rate, time. Amount times rate times time. Right, now we get an amount to be 9,000. Year number 3 now. When am I going to stop? I am going to stop up until the asset was sold. If the asset is not the time for it to be sold, I will still continue calculate it for the next coming whatever donkey years. Okay. Now, year number 3 now. I will calculate from the 1st of March 2021 up until 28 February 2022. Now, I will now say again the very same calculations. It's going to be 12 months. February to March is 12 months. I hope you understand now. Same calculations. 45,000 times 20 over 100 times 12 months. Out of 12 months, we get 9,000. Okay. Remember, I'm now accumulating the depreciation. What is to accumulate? It is to put. I'm accumulating the depreciation. Once it's full, I call it now as my accumulated depreciation. Okay. Now, next one. Remember, I'm not yet on the day of disposal. I'm only going to stop once I'm on the day of disposal. Meaning, when you answer to this question, it is important to write down your boundary, to draw your boundary, to say that I am going to stop once I reach what? I reach my day of disposal. Now, again, I'm going to continue with my calculation. Now I'm on year number 4. Year number 4 now will say March 2022, which is a day after February 28 or February 29 if it's a leap year. So it's March 2022 up until February 2023. It is still going to take me to 12 months. So the calculation will become the same. It will be 9,000. Okay? Year number 5 now. Now I am starting now. I'm on my current. This is now my what? My current year. Why am I saying my current year? I just visited my timeline or my what do we call it? My period, financial period. So it's March up until February 2023. That is my timeline. Now, there is March 2023 now. I am now going to stop on the day, last day of disposal. There is March to 31 November 2023. We've already done this. This depreciation is already calculated before. Now, interesting. How am I calculating this now again? I can calculate it in another way. 45,000 times by 20 over 100 times by 49 months out of 12. Then my answer would be 36,750. Where is this 49 months coming from? Remember, it is the total of all your months. 4 plus 12 plus 12 plus 12 plus 9. But this cannot be used when it's diminishing. Why cannot be used? Because the depreciation is not fixed. It's not fixed. The cost price is not fixed. This method can only be used whenever it's on cost price. Now, how do I prepare my asset disposal account? Grade 12s, can you brainstorm? What do we used to have on our asset disposal account on my debit side? What do I have on my credit side? Let us now look at this. Right, correct. Now let us just check here. Remember, my left-hand side is my debit side. My right-hand side is my credit side. What do I have on the debit side? Debit side, remember, I need to have the cost price. Cost price of what now, grade 12s? Yes, the cost price of the sold or the disposed assets. This is your favorite. I know you love it. Okay, Right. Now, the 45,000, now, where is it coming from? Let's think back. Just go back to our additional information. You remember our additional information? It was saying that the equipment with the original cost price, which was purchased on the 1st of November 2019, price was 45,000, was later sold on the 30th of November 2023. Okay. Right, now this is the 45,000. What is this 45,000 for? It's our cost price of this equipment. Now we come to our credit side. Our credit side, what are we going to have on our credit side? We are going to have our accumulated depreciation on equipment. Okay? Now, accumulated, we have already calculated it. We calculated it to be 36,750. And how did we calculate it? Remember, we said depreciation of year number 1 plus year number 2 plus year number 3, 4, and 5. We combined them together, and then we got the amount. Meaning, this accumulated, remember, it includes the depreciation of the sold, the one that should go to statement of comprehensive income as well as fixed asset note. Now, it was sold for cash. This is why we write bank, because it was sold for cash. If it was sold on credit, it was going to be debtors control. Donated, it was going to be donation. Taken for personal use, throwings. Remember all of these ways of disposing an asset. It's what we have done in the previous grade, in grade 11. Now, how are we getting the selling price now? We check which side is bigger. The bigger side is 45,000. Then I record 45,000 on both sides. Now we say 45,000 minus 36,750, and then we get the difference to be 8,250. Right, there is no profit, there is no loss in this case, because an asset is sold at a book value. Already, this is what is being explained, that I've already explained, cost price minus accumulated depreciation. Now, let us look at the asset disposal account format. Remember, this is now the full format. On the debit side, it will you will have the equipment cost price, meaning this is the cost price, meaning the original price, irrespective of the method of depreciation, or the vehicle cost price. Where do you find this? It can be given on the transaction, or you will have to calculate it. And then on the credit side, you will have your accumulated depreciation. Remember, what is this now? These are all depreciations, if I may call them, depreciations of asset disposed. What do I mean by all? I mean depreciation for the previous year plus depreciation for the sold in the current year. Now, on the credit side again, we may have a bank. Why would we have bank when we dispose for cash? We may have debtors control. Why would we have debtors control? Why would we have debtors control, grade 12s? Yes, when we dispose on credit. And then we may also have creditors control. In what instance may we have creditors control? Let's think back. Are you getting it right? Yes, whenever it's a trade in. So this one would be for a trade in. What am I saying about trade in? I mean now, if I have my car, I no longer want it, I can take it to the garage and get another car, to the car dealership and get another car. or of the latest model in most cases, meaning I give them my car, they give me another car, and then I pay the difference. We call that process as trade-in. An asset can also be donated, meaning on the credit side we'll write donation as the contra account. An asset can be taken for personal use, then it means on the credit side we will write drawings. And then my folio will always remain as my general channel. Okay, now you see we have something called loss on sale. When do I have loss on sale now? We'll have our loss on sale if the debit side is bigger. So meaning if your cost is bigger than your accumulated plus the selling price, then you will have loss on sale. Now it's also being explained here regarding the profit on sale. Profit on sale may be recorded on the debit side. So that is profit on sale. So you can't have both. You can't have both. You would either have loss on sale of an asset or just profit on sale of an asset. Okay. So that is what we have. Now, we look at the next one. We have our tangible asset note now. How does it look like? What is happening here? Just a busy table now. What is this? Now, this is what we call as fixed asset note. Where are we getting these amounts? We got it from our information. Remember, our note will have the cost at the beginning, meaning there is our cost price at the beginning, minus our accumulated depreciation, meaning the accumulated that was also there at the beginning. Okay? And then when I say cost minus accumulated, then we get our carrying value. Remember the word carrying value, there is cost minus accumulated, then we get our carrying value. Now we have an asset would be moving in three ways. These are movements, additions at cost. What is this additions at cost? It is when I buy an asset. So this is the cost price of the asset bought. Okay? What is disposal at carrying value and how do we calculate it? Remember, it is the cost minus total accumulated of the sold. Okay? Cost price minus total accumulated of the sold. Remember, this should be negative. And then depreciation, remember, this is coming from our special word, son. Meaning, it's the depreciation for the sold plus depreciation for the old plus depreciation for the newly bought. Then we get the total. Now we have the last three parts. Cost. This one will be cost at the end. How am I getting my cost at the end now? This will further be explained at a later stage. This is cost at the beginning, 101,000 plus 75,000, which is our additions at cost, minus, remember, we had our asset disposed, minus that asset that was disposed, the cost price of it. Then we get the 131,000. How do we get the accumulated at the end now? This is accumulated at the end. How do we get it now? Remember, we say accumulated at the beginning, which is 42,700, plus depreciation for the year, then minus total accumulated of the sold. And then we are going to get the 27,650. Now, how do we get our carrying value at the end? We will now simply say cost at the end minus our accumulated depreciation at the end. Now, this is what is further explained now, as I promised you, grade 12s, the accumulated depreciation. It is further explained now. It is further explained that the 8,250, it is off as a result of 45,000. Where is 45,000 coming from? Remember, this was our cost price. And then minus our accumulated, total accumulated. Remember, we did calculate this in our previous question. And then we come to the 8,250. So these are important calculations, grade 12. You cannot go to an exam without mastering and practicing these calculations over and over again. Right? Now again, we are further explaining where is the 131,000 coming from now. This is the cost at the beginning, remember, grade 12s, plus our additions minus cost price of our disposal. Right? So I hope here we understand what is happening, grade 12s. Let's look at our accumulated depreciation now. How did we arrive at our accumulated depreciation? Accumulated at the beginning. Remember, this is my accumulated at the beginning. Plus what now? Plus my depreciation for the year. There we have it. Minus what now? Minus my total accumulated. Remember, this is my total accumulated depreciation of my sold assets. Total accumulated depreciation of my disposed assets. Please do not forget this calculation. Don't forget to subtract the total accumulated of the sold assets. Now, grade 12, let us look at our activity 2 now. We are given our information now for land and building, 3 million. Cost 3 million, accumulated obviously will be 0, because we explained earlier on that land and buildings would appreciate. They will not lose value, but they will appreciate if they are properly maintained. Right? Now, the question says we have A there. Definitely we'll have to calculate that, the disposal at carrying value. And then we have our carrying value at the end, which is similar to our cost at the end. This will be the case in grade 12, since the land and buildings do not have the depreciation amount. Additional information, land and buildings were sold at a cost during the financial year. Now, what are our workings now? Let's go back and see. It is the 3 million and the 2 million. Okay, for us to get A. See this. So that is 3 million. What is 3 million? This is the cost price at the beginning minus the cost price at the end. And then we get our additions. Okay. Now, remember, food for thought. We are saying now land and buildings are recorded at cost, so they do not depreciate according to grade 12 curriculum or syllabus. Right, let us look at information C as well as D now. I mean, letter C and letter D, what are we looking for there? We are looking for disposal for the vehicles. We are also looking for what? For the depreciation for these vehicles. What are we given? We are given the cost at the beginning, accumulated, as well as the carrying value, which was 900,000 minus 240,000. That's how we got the 660,000. And then we are given the cost at the end, accumulated depreciation at the end, as well as the carrying value at the end. What are we supposed to do here is to calculate our depreciation. After that, we'll calculate our disposal at carrying value. Additional information: a vehicle was sold at a carrying value on the last day. Remember the intervals. What we already know is that an asset can be sold beginning of the year, during the year, end of the year. This time, what is happening? An asset is disposed on the last day. Let's see what's happening here. Very interesting. Right. What is my depreciation here? The depreciation percentage is 20%. Put that aside. Very important. Keep it safe. We need it. We would need it. Right. Now, which method is being used? Also put that aside. Very, very important. We can't calculate depreciation if we don't know the method, we don't know the percentage. We need to know at least one of those. Okay. Now, we're looking forward to this. How are we supposed to respond to this question? Let me allow you to calculate now for a second, for a minute. We are starting by calculating B. Right, grade 12s, welcome back. I hope now everyone is calculated. Let us look at this. There are those learners maybe who are not done. It's fine. Let us just do calculations so that we save on our time. Right, let us look at our expected response now. For B now, we are going to take our 660,000. Why are we taking the 660,000? Because we are using diminution. Remember, where is the 660,000 coming from? There is my cost minus accumulated. Meaning, this is my carrying value multiplied by the rate. Okay? Then we get 132,000. Okay? This was easy. You'd agree with me. The next one. How am I calculating my disposal at carrying value? That is C now. There are two ways of doing this. We can take the 660,000 minus 132,000 minus 446,000. We get the 82,000. Or we can take 150,000 minus 68,000. But remember, grade 12, the formula for disposal at carrying value, remember, it says cost price minus accumulated, total accumulated depreciation of the sold. Okay? Then we get the 82,000. Okay? That is 660,000 minus 132,000 minus 446,000. Or Or alternatively, we can do it by saying 150,000 minus 68,000. Then we get 82,000. Now, where is the 150,000? Just to elaborate, remember it is the 900,000 minus 750,000. Then we get the 150,000. Where is the 68,000 coming from? There is 240,000 plus 132,000 minus 304,000. Then we get this 68,000. Therefore, we're now going to say 150,000 minus 68,000. Okay. Now we're looking at our activity 4 now. Activity 4, we need to calculate carrying value, cost, carrying value again, as well as our accumulated. Meaning we are doing accumulated, there is A. We are doing carrying value, there is B. We are doing C, which is our cost. And then we are doing D, which is our carrying value at the beginning. Right, let us look at A. How are we calculating A now? With our A, we were looking for accumulated depreciation at the end. Now, how do we calculate accumulated depreciation at the end? Remember, we are given accumulated depreciation at the beginning. We are also given depreciation, okay? So, meaning we will take the 52,000 plus the 52,000, meaning accumulated depreciation plus depreciation, okay? We get the 105,000. Let's move on. Now for B, remember in B, we were calculating carrying value at the end. Now, how do I calculate my carrying value at the end now? It will be simple now. For carrying value at the end, we are going to take our cost at the end, which is 258,000. And then we are now going to do what? We are going to subtract. It's either you subtract the accumulated at the beginning minus depreciation, or you can take the 105. Remember, this is 105,000. Okay. Now, so it's 258,000 minus 105,000. Then we get 153,000. Okay. Letter C now. How are we getting letter C? We take the 258,000. Remember, where is 258,000 coming from? If you may just go back. We have 258,000, which is our cost at the end. Right, 258,000, and then we subtract to 48,000. And then we get 210,000. Then letter D. How do we get letter D now? We take 210,000 minus 52,500, and then we will get a beautiful 157,500. Okay. Now we have our activity 5. Let us just check what are we doing in activity 5 now. We are now calculating the disposal at carrying value. Look at these activities. They are preparing us for the unknown. In case in an exam they want you to calculate cost at the beginning, you should be able to do it. Disposal, you should be able. Cost at the end, you should be able. Now, we are calculating disposal at carrying value. What information is given to us? We are given information for the vehicles. There is cost at the beginning, accumulated, meaning I can also get, or we can also get the carrying value at the beginning. How will I get my carrying value at the beginning? Cost at the beginning minus accumulated at the beginning, and then we will get our carrying value at the beginning. We're going to do that at a later stage. Now, just look at our additional information now. It says now a delivery vehicle bought on the 1st of March 2022 was traded in. Remember, I talked about the word trade in. It was traded in for a new vehicle costing 450,000. This has already been entered. Okay. How are we calculating our depreciation? Very important. It is 20% on what? On our diminishing balance method. Here's our workings now. Remember, we're supposed to be calculating disposal at carrying value. We are calculating disposal at carrying value. This is our disposal at carrying value. Remember, for us to calculate our disposal at carrying value now, we'll take 1,120,000 plus the 450,000, which was the cost price of the new asset, and then subtract the 1,270,000. Let us see where is this coming from. Remember, the 1,120,000, this is our cost at the beginning, and then 1,270,000 is our cost at the end. Meaning, what are we doing here? We are just taking the cost at the beginning, 1,120,000 plus 450,000 minus 1,270,000. And then our answer becomes 300,000. Now, disposal at carrying value now. We are saying for our disposal at carrying value now, we have worked out the 300,000 we know. Now we are going to take the 300,000 and then we subtract 60,000. We also subtract 24,000 and then we get 216,000. Okay. Then moving forward, how are we getting the 24,000 now? That is 300,000 minus 60,000 times 20 over 100 times by 6 over 12. Remember, an asset was with the business halfway. Okay, so then we get the 24,000. 24,000, remember, this is our depreciation for the sold. Already this part has been covered before on how we calculate depreciation. Now we're looking at our activity 6. We have our cost, our accumulated. What should we calculate here? We need to calculate our depreciation for the year. We are calculating depreciation for the year now. That is from in figure 5. Now let us see the additional information given to us. We have Buntle Limited bought a printing machine on the 1st of June 2021. On 1 December 2023, the company bought a new printing machine to the value of 65,000. There it's recorded. No equipment was sold during the year, meaning there won't be any disposal. Depreciation on equipment is written off at what percentage now? It is written off at 18%. Which method are we using? Very important, grade 12. Don't forget to note down the method you are using. The method is called what? Cost price. And how do you calculate depreciation using cost price method? Got it. We say original cost times by the percentage times by months over 12. Okay. Now let us look at our calculations now. We have the new. Where's the 65,000 coming from? Let's go back and see. Remember the 65,000? We are going to start it. When did we buy this new? It was bought on the 1st of December. Okay. Let's now go back to our response. It is 65,000. Remember, where's the 18 over 100 coming from? We were told that our depreciation is 18% per annum on cost. So meaning it's the original price multiplied by the rate. And then where is this coming from? Where is it coming from? When did we buy this new one? Remember, it was bought on the 1st of December 2023. The financial year end will be 28 February 2023. Meaning it will be December, January, and February. That will be 3 months out of 12 months. And then we get 2,925. Remember, we're supposed to do the word which says sun. Sun, S will be 0 this time. O already calculated to be 29,250. Okay. Right. And then for the old one, very special. Very special. Why did they do it like this? Remember, before I calculate my depreciation, I need to stop and think. Let's go back to this information. Check. The old one is 200,000. How much is my accumulated depreciation? It's 171,000. Now, if I can calculate depreciation once more here, what is going to happen? If we can just quickly calculate depreciation once more, what is going to happen? If I can say 200,000 multiplied by 18%, what will I get here? Just calculate together. 200,000 multiplied by 18 over 100. We are going to get an amount of 36,000. That will be the depreciation. Okay. Now, if you can take that 36,000 now and add it to the 171,000, what are we going to be getting? We are going to be getting our accumulated to be 207,000. Okay? The accumulated cannot be bigger than our cost. Our cost is 200,000, but our accumulated is what? 207. Meaning our answer will be negative 7,000. And we cannot have a negative answer while the asset is still being used. If that's the case, what are we doing, grade 12s? We are going to use what? What we call as 1 rand value method, which is also known as residual value. Okay. Now, how does residual value work? It will now say the amount of 200,000 minus the amount of 171,000, we get an amount of what? 29,000. This is our carrying value at the beginning. So grade 12s, if we're using residual value now, we can now say 29,000 minus 1 rand. This is what has been done here. Why 1 rand? It is one asset times by 1 rand. This is why we call it as residual value. But this is the shortcut, grade 12s. There is another method of doing this. You can have another method of doing this where we just look at our work to say that we have our cost at the beginning, which is 200,000. So I am preparing note number 3 here. Accumulated, which is 171,000. Carrying value, which will be 29,000. Down there, I can have my accumulated, my cost, and my carrying value. Right. Now, carrying value will become 1 rand here. My cost will become 200,000 because there is nothing bought. So now I will say 200,000 minus 1 rand. I get 199,000. Okay. Now, my depreciation, what I'm looking for now. How do I calculate my depreciation? Remember, if I say accumulated at the beginning plus depreciation, I must get what? Accumulated at the end. What am I saying, grade 12? This is what I'm saying. Accumulated at the beginning plus depreciation. This should give me accumulated at the end. What do I have? Accumulated at the beginning is 171,000 plus depreciation is unknown for now, equals to 199,000. Now, if I substitute here grade 12s, it means now I will have my depreciation equals to 199,000 minus 171,000. What will I get here now? 199,999 here. Apologies for that. So it means 199,999. Okay. You can just erase that part so that we show it clearly. Right? So now it's 199,000. Okay, 199,000. And then we are going to get our answer to be the 99,000, the 28,999. Okay, right. How are we getting the 29,999? We're just going to take the 171,000 minus 199,999. Okay. And then we get 28,999. Okay, moving on. We look at the internal control now of tangible assets. What are we talking about when we say internal control of tangible assets? We are looking at how do we take care of our assets? How do we take care of our assets? How do we ensure that our assets are safeguarded? That is internal control. Let us look at those. When we buy a car, when we buy a computer, the manager or the supervisor or the senior personnel must authorize, must give permission to say, we give you permission to go and buy this car. Then the second one, the internal auditor should ensure that the fixed asset registers, one of the records, should be properly done and documented. Okay, so there should be proper documentation as well as proper records of all items or records relating to fixed assets. Then again, we're saying that the fixed asset should be recorded in a fixed asset register. There would be a business where they would just buy cars and then they don't record in the fixed asset register. That would mean there would be bad control. Meaning anyone can steal that particular asset and no one will notice. Moving on, all receipts or invoice should be kept as proof. Why are we keeping it? We're keeping it for insurance purposes as well as for external and internal audit purposes. They should be there. Meaning the receipts and invoices can be used as the source of evidence for our audit. Also, this fixed asset purchase must be labeled, meaning it should have a serial number or a sticker saying this is computer number 1 bought on this date, or there should be a barcode or just the serial numbers for it to be identified. Remember, if I'm running a company, I may be having 1,000 of computers. How do I ensure that these thousands of computers are there or these cars are there? All of them must have a unique code. If it's a car, every car will have a unique number plate or a code or a VIN number and so on. Okay. Right. Moving on, we are saying that we need to check, we need to count the fixed asset more often. So we count it more often and then we compare them against the asset register. Now there should be that gentleman or the lady sitting in a certain table somewhere or in a garage or the basement or where we keep our assets with a logbook. Meaning if I'm a driver, I take the car, I sign it, I write the time, and maybe the petrol available. And there is that lady or gentleman who will just be checking if I'm writing it correctly and will verify what I've written. When I bring back the car, there should be someone with that particular logbook or in an office where I will check in the car, and then they must do inspection of that particular asset. Okay? So they need to do inspection. As they do that, it means they will be tracking the movement of the asset. You can't be writing that you have traveled for 20 kilometers only to find that you've traveled for 100 kilometers. They should be able to detect who used them, when was it brought back. Okay? Next one. Now, the movement of assets must be recorded in your logbook. Meaning, if an asset is moving up and down, then there should be records of that. That today a truck left and it came back. There should be a logbook. Now, the logbook must be monitored. There should be someone monitoring. But at a certain period, there should be another one who will now come and do verification or internal auditing of that before the external auditing. Now, we are also saying that for us to take care of our assets now, all these assets should be insured. They should be insured against any possible disaster that may occur, against fire, against floods. Remember, if I'm having my business in Durban, I will ensure that I insure my assets against what? The floods, because there were floods, and then most businesses suffered great losses because they were not insured. I will also insure it against theft. We know there are areas where hijacking is rife, so I will ensure that that particular asset is insured against theft. So, and then now we're moving on. The ethics relating to tangible assets. There should be rules that should be put in place that will stop employees or workers from abusing, defrauding, doing anything bad, misusing our asset. How are we doing this? How can they do this? These employees can defraud the business by using our assets for their personal gain. Using the truck of the business to go and see the girlfriend. Okay? Using the truck to deliver or to go and do grocery for his own family. Okay? So there should be systems in place now to ensure that the drivers or the users of our fixed assets using a computer to do whatever that is not work related. Okay? Now, next one. Some would be recording incorrect kilometers. These are some of the unethical practices that may be committed by the employees. Now, how do we solve that? There should be someone monitoring this time book or the logbook so that the employees are recording the correct kilometers that they have traveled. Some will record the incorrect ones so that they hide the fact that they use the vehicles for their own personal gain. And then moving on, some workers will also be spending more fuel than the other vehicles. If the other vehicles have spent only 20 liters of fuel, you will find that there's an employee spending about 70 liters of fuel. How did he spend? Maybe he drained the fuel out of the car, or the employee has been traveling, doing his own trips using the fuel of the business. There should be strategies in place or internal control measures in place to ensure that that employee does not abuse. How do you do that? By having a logbook recording the amount of fuel spent, on the amount of fuel that is available on the day, the amount of fuel spent, compare it with the other drivers, and then you will see now the trend. And then grade 12s, thank you for watching this lesson. See you next time. Goodbye.